Well, this is very interesting because, as you mentioned, Libya produces about 1.2 million barrels of oil, which mostly exported to European market, and it's mostly light oil. So the volumes of this disruption obviously is going to have a major impact on the market if happens. But the question is that how quickly and how much. But as you see the market reactions, that how this adjustment happens, especially for WTI, which is light oil, and it would be the perfect suit for substituting this oil, has kind of adjusted itself back a bit today. So it seems that market, it does not look into a very quick, sudden interruption of all of these volumes, but rather a gradual disruption.
So you don't think near-term buying at this price level makes sense?
So the point is that we are having multiple geopolitical risk factors around the world, which are all targeting different types of crude oil, different regions and markets, and there is not clear if they're going to have a long-term versus short-term impact, and also if their impact is going to how much of the volumes are going to be disrupted. And if I want to break this down, we obviously have, you just mentioned before our interview, Iran-Israel tensions, that it seems that market has somehow is comfortable with the fact that Iran's responses are usually measured, targeted, consulted with neighbors, often informed before, and is not designed to create a long-term destruction of facilities or disruption of oil supplies, but rather a symbolic and also intelligence and military balance of power with Israel, showing off those capabilities rather than having a goal of disruption. And also Iran is almost exporting at its maximum capacity currently, so they do not want to interrupt their own oil supply. Then we have the Houthis. Houthis usually in the Red Sea are targeting the shipping lines and ships. And but again, the market is comfortable, even though that there are examples and anecdotes. We just recently had one ship being on fire because of Houthis. It seems that Houthis also are having a measured attacks that are also having allies in the region and also markets that the oil is passing. So again, market seems to have a comfortable understanding that this is not going to be sudden or long-term. We have Russia, obviously Ukraine conflict, that is moving beyond sanction the oil that was, or gas or energy fuel that was exported from Russia, to more of escalating, targeting infrastructure. And any infrastructure that is going to be targeted could have potential impact, because Russia is a major exporter and supplier of both oil, fuel, and natural gas in the market. And finally is the Libya that we talked already about it, the question of how much and for how long this oil is going to be interrupted.